Ladies and gentlemen of the crypto space, we're live on Wednesday, April 17th at 11:34 a.m. Money and Investing. We've talked about this topic to great extent, but on good days in markets, it's much more popular to talk about things in a certain way. Oh, it's going up, what to buy, what to buy. On down days, nobody wants to hear about, oh, it's going down, it's horrible. But what I've tried to do over the last years for all my viewing audience is to offer a third way of thinking, which requires a significant deviation from the norm, reprogramming your brain, a different perspective, a different time horizon. And it's quite possible this is not even something that can be done for the youth, a younger mind. You need to have a different perspective on life. And that's harder when you're young, particularly. I'm trying to give some context to the primary topic, and obviously we'll get to QA at the end. But when you're young, I think I've said this point actually before, 4 years when you're 24 is a significant part of your life. 4 years when you're 40 is much less a part of your life. This is why maybe it's easier for an older person to process longer periods of time because it's less a part of their life. 4 years on 40 is 10%. 4 years on 24 is 20%. Four is 20% of, uh, no, I'm sorry, 5%? I don't know. The point is, don't pick on me for not having that kind of mental clarity for some math at 11:30 in the morning. I need a coffee. Point being, it's much less a part of your life when you're older. So it's much easier to try and create mental frameworks where time is allowed to pass and things are allowed to play out. I mean, look at the chart. Look at the chart. Bitcoin is down to 60. You need to digest some very high level topics. Are you capable of digesting when Bitcoin's at 40? There is a great chance that Bitcoin retraces the 40. I don't give a shit what anyone else says. On this chart, Bitcoin's at a premium, and this is the monthly chart. When you're above a moving average, you're at a premium. When you're below a moving average, you're at a discount. Mean regression is returning to the average price periodically over time, and you'll go above it and you'll go below it. The secular trend is the overall direction. You don't really see it here, but you surely see it here on the 10 SMA and the 3-month chart, even the time-weighted average price. It's up and to the right, with cyclical deviations to the upside and cyclical deviations to the downside. So you're at a premium on the 3-month chart. Bitcoin looks great at $42,000. Digest that. So what does that mean from an actor standpoint? You paid a premium if you bought it recently, and at 42, it's fairly priced. And if you're below, you get it at a discount. If you see a dip to 31K, you buy some Bitcoin. Now, Bitcoin is a money. I've defined it to you guys as an instrument that has a degree of moneyness. That's all this shit is on the planet. Things that have varying degrees of moneyness. I mean, to a degree, even currency has degrees of moneyness. But structurally, money prints currency. Now, the world, you have to understand in terms of what everyone does, what the majority do, and then shit at the margins. So the world uses U.S. treasuries as money. The central banks and whoever is responsible at the nation state level for accumulating like gold reserves or precious metals reserves, they use gold as money. They also have hordes of other instruments with degrees of moneyness, be it silver, food stores, the government cheese. I don't fucking know. The point is they're hoarding. Money is hoarded and used as a way to express relative ownership because other countries have this stuff, and if you have more of it, you have an expression that you have more, and you're able to use that delta as an expression to create money and use money. And money is an expression of influence, and that's meaningful from a nation state perspective. And that's where we are, and it's imperative to understand what the world uses as money, what we are starting to see have varying degrees of moneyness, and the relationship between money and currency. We've talked about the significance of the dollar because nobody wants to spend money. Now, process these definitions. It's more critical than ever because it's going to serve you well in the coming decades, especially as the dollar has strengthened to decade highs in consumption. So money prints currency, and you spend currency. So notice the credit card on the left of our intro screen is a credit card, a debit card, a digital means of account identification. That's the majority. Nobody's using digital payments of a crypto nature. The most popular thing from a crypto perspective is a simple means of expressing crypto on a debit card, crypto-friendly debit cards, integrated with some sort of banking infrastructure at some level. So you can have some pipe dream about the future and speculate on the future. That's great, and that's really the right side of the intro image investing. But that's not today. Today is important to understand, and it's not about respecting today. It's about accepting what is, being realistic, and that's rational. So today will persist into the future, meaning the state and the tools that we have to use today. So crypto debit cards are pretty awesome. So the question is, how do you put currency on a crypto debit card? How do you put something on a crypto debit card so you can pay for things and swipe it to live? And that's a great topic. You could do that obviously with money arbitrage and currency spread arbitrage. So what is it? What do those two things mean? What do you think you're doing when you buy Bitcoin? It's a money arbitrage. You're arbitraging your currency units because you're buying usually Bitcoin with a currency. You're not buying it with gold. So I'm just being very specific with the terminologies that I've defined for everyone. It's a cross-currency money arbitrage. This Bitcoin has very little characteristics of a currency. A currency is easily printable using credit. There are very few credit products for Bitcoin. Period. It's at the margins. It's a point where it's pretty much non-existent. It's used as a decent amount of collateral in crypto markets like on an Aave and see a Curve, Llama Lend, and CRVUSD accept it, but it's microscopic. So it's not something people want to spend. What you're going to use it for is arbitrage as the rate, the price relative to the dollar. It's not like you're swapping back and forth with gold, your Bitcoin. That sounds weird because most people think in terms of dollars. So I don't define that as investing. I define that as Forex market activity, I guess FX investing. It's not investing, it's arbitrage. It's exchanging to exchange back in more favorable conditions. It's not investing. process that, digest that. To me, that's the most meaningful distinction in behavior in these markets and plays a big role in my capacity to sustainably engage with these markets into the future. I treat these parts of the portfolio as two very different buckets, which I've told you guys is cash and investments. And each one of those buckets has an entire story to be told. But you don't look of the cash part of my portfolio, Bitcoin, Ethereum, some gas token shit, and stablecoins, dollars. Which is the one you'd rather spend? It's not the Bitcoin, and it's not the Ethereum necessarily, even though Bitcoin's outperforming Ethereum, but you need Ethereum to engage with various smart contracts across various economies at this point. But I don't want to spend that preferably, so I much prefer to spend my dollar stabilized currency units. Realize what that means. That is exactly what we've been talking about. You don't want to spend money. You want to spend currency. And you probably literally do that yourself. And most people don't realize it. So money isn't investing. It's an arbitrage. So just think about investments. What is investing? And I guess you could define it for yourselves, and that's why I talk about how I define it. And investing is what really gives me that forward-looking perspective, my capacity to allow time to pass. And the whole story I've told you about pick a business, own a business that will exist in the future. How do you know it's going to exist in the future? Well, I've chosen the premier businesses on the frickin' planet that will exist in the future. Therefore, I have exposure to the future. And that's an extraordinarily comfortable place to be. On a day when Bitcoin is at 60,300 and people are pissing their pants. Everything's depreciated very significantly. But man, the technology is remarkable. These businesses are doing some remarkable things. Frax at 466. It's literally doing the craziest shit. And now CRV-USD is heading over to base. That's crazy. Because not only is Aerodrome on base, and that certainly has a capacity to finance liquidity depth, but Curve itself has a capacity to finance liquidity depth. So things can get pretty interesting with regard to protocol and liquidity. And that recycling of protocol and liquidity revenue. So you can have some very interesting growth of these currency instruments, mentioning CRV-USD in that regard. So these businesses, these investments, they're going to go up and down. They're going to go really up and really down. But it's the secular trend. Look at the secular trend on Bitcoin. So these businesses will exist in 2028, 2032. They're on autopilot. They're going to do what they're going to do. And there is a bunch of incentives in place. And if there's incentives in place for investors, there's certainly incentives for development and iteration. There's incentives everywhere. This entire market is screaming on a red day like this, and this market is absolutely screaming, holy shit, look what's going on. I'm literally flabbergasted, like lost for words, thinking about the scale and scope of what Frax has done and who they're partnering with and what deployments they're doing. I'm literally stunned with the evolution of what Curve is doing. It is groundbreaking. They have a complete vertical integration, a complete vertical stack of infrastructure to manage their bank deposits, their bank liabilities, their currency units that they have a capacity to print, and an infrastructure unlike pretty much any other to manage the expected value of that currency. an infrastructure that really makes nation states look weak and kind of pathetic with the degree of relative control over that pricing, because it's interest rates that control that pricing, because it's interest rates that are the only way to indirectly affect market actor behavior. How do you force someone to repay? They're a third party. They can do what they want. Charge them interest. Threaten to have their collateral that they posted be taken. How do you incentivize a person to create those currency units? Charge little interest rates. And the protocol does it automatically. It's quite extraordinary. And to top it all off, you could literally throw around incentives, because that's their vertically integrated stack that I'm talking about, to incentivize borrowing, currency unit creation. I mean, that's just crazy. And those are just two protocols. Those are the oldest protocols we've talked about. And frankly, in this market, with the way kids are running around doing their shit, trying to figure out the next hot thing, it's kind of boring. But sorry, you're watching a 40-year-old guy talk about investing, thinking about 2028 and 2032. Maybe there's some shit that the old people know that the young people don't yet know about time, about capital management, about psychological well-being, because you have to be relatively mentally stable in order to let time pass. You certainly have to be mentally stable to manage capital in a sustainable way. Interesting topic, huh? So either it's time to, if you're younger, to start realizing, oh shit, there's a different way to think about this, and old people are probably ahead of the curve. And if you're older, you're like, oh, this kind of makes sense. You're going to digest this topic of conversation much better if you're older, because we certainly have a capacity to let time pass. You just didn't realize what time was capable of. 2028 is coming whether you like it or not. 2032 is coming whether you like it or not. So all we've done on this stream is highlight the highly likely conditions that are going to be in those future years. And we folded in literally macroeconomics to understand where the damn system is heading, how the system works. We've integrated cryptocurrency systems into the macro financial framework and tapestry of how money and currency work. So this is all heading in a very obvious direction. The destination is completely unambiguous. Path is what fucks up the kids. Path is what, even for myself as someone who lives in the future, there's an emotional reaction, but it's irrelevant because serenity now. Can't do shit about it. And my businesses are going to exist in 2028 no matter what. That's the deal. That's the bottom line. I know you guys are going to want to talk about a lot of investments, and that's fun. And we're going to do that because I'm really excited for a lot of tech. I obviously mentioned Curve and Frax. That's boring shit. We've talked about VE33 lately. I'm very excited. Look at the TVL on Merlin and the Bitcoin L2s. Rolex has always been interesting. I've been mentioning that for quite some time. I mean, literally, I don't understand why that's not a hotter topic. Now, I understand the Bitcoin maximalists. I'm like, it doesn't make any sense. It's so short-sighted in the way history tells us societies require monetary systems to function. Nobody wants to use money. It's digital gold. Yeah, nobody fucking uses gold. And credit creates incentives and opportunity. Can't do shit without credit. If you're an entrepreneur and you want to start a housing development, borrow money. Credit. Oh my God, is it just like blatantly obvious that you need that kind of infrastructure? So the question becomes, how do you do it? And what kind of technology do you need? And literally, you need the concept of an L2 because the L1 infrastructure is not capable of that. You cannot do that kind of state management with regard to records and accounting and calculations and programs and software and algorithms. You can't. So you need that infrastructure. So who's going to build the best infrastructure? It's not going to happen on layer one, Bitcoin mainnet. So I don't understand why it's not talked about more. What's exciting? So obviously Stacks has been interesting with regard to price appreciation, but what's the tech stack? Who's building what? It's not even in EVM compatible language. So what does that mean? All the tech infrastructure, all the software built on Ethereum. It's not even just Ethereum. It's not even just Ethereum. It's all the EVMs. It's not compatible. How insane is that? You have all these billions of dollars of capital that have been deployed to EVM pieces of software, and you're just going to say, fuck it, force everyone to build new businesses? That's insane. So any EVM stack on Bitcoin is very, very interesting. Might not be a great investment, but technologically it's very interesting. I favor Rolex because Cisco has been building that shit since what, 16? 2016? Most of you found crypto in probably last year, 2023, maybe 2024. And for a lot of folks that follow me, you found it maybe 2020, 2021. Very few folks that I interact with remember 2017, 2016. Nobody knows what the hell a damn masternode is. Nobody remembers ICO season when Ethereum was 30 bucks. So you gotta zoom the fuck out to really get a perspective on where we were, where we are, and where we're heading. So what happens with there is no zero sum. I don't know if that's let me try to explain further the idea. All right, Bitcoin L2 EVM compatible. Oh, great. Do you think that invalidates these other systems? Do you think, oh, the US is the best place to live, so nobody lives anywhere else on the fucking planet? Of course not. So other systems are established. There'll be failures, just like with traditional business. Look at the stock market. There's bankruptcies all over the place. And you're going to have diversified infrastructure. You have a lot of networks. And these networks are very much markets. You can have Bitcoin markets. You can have Ethereum markets. You can have Avalanche markets. You're going to have Cosmos markets. You're going to have Polkadot markets. You're going to have frickin' Cardano markets. Some may have more opportunity cost than the other, but these systems are going to be here. No matter how ugly the charts look, no matter how much emotion you have vested in your positions, stop paying a premium, and then you can allow time to pass and understand the difference between money and investing, because money doesn't make more money. Money arbitrage makes more money. If you're trading Bitcoin back and forth to dollars, that makes more money. But investing, the whole point is making more money, because investment should produce money cyclically, periodically. And in traditional finance, the fastest those fuckers like to pay you is on the monthly. In crypto, they pay you on the weekly. In theory, it should be streamed real time, every block by block, every couple of seconds. In theory, I mean, that'd be an interesting destination, but frankly, on the weekly, I'm like, all right, that's cool. I'm cool with that. Yeah, it's a good start on the weekly. Get a paycheck. Pretty much makes investing in stocks seem stupid, especially considering the humans involved and their opinions. Because you literally invest in companies that have no opinion, just pure software. Anyway, anywho, just trying to give you guys some excitement on a day that newbies and small actors and younger people either lost all their money already or don't have that 1,000-foot view perspective of where we are. What are you doing? Why are you doing it? Where are things heading? Why is this significant? Why is this meaningful? The price doesn't. It's there's a lot of non-useful narratives in it for the tech, hodling. The one thing about like hodling and in it for tech and bag holding, those phrases don't encompass any understanding whatsoever of where we're heading, of the tech, of the infrastructure, of the concept of investing, of the distinction between money and currency and cash and investments. This is a rich and nuanced process to be a fiduciary, a self-fiduciary responsible for capital, responsible for rational investing. And those stupid terminologies are often slung to elicit emotional response, and without a robust capacity to digest those phrases and terminologies and narratives, um, there's no capacity to understand them. What do they mean? Be deep, be rich, make good decisions based on sophisticated ideas, and you'll find better results over time. And you'll chart your own path. Most importantly, don't compare to other people. This is a one frickin' player game. You're playing this against yourself, and your results will be your results. Who gives a shit what anyone else's results are? It's not a relative measure, and you'll be just fine. And I'm sure uh, you not I'm sure, but you need to realize that your results that you will achieve, own it. It's something to be proud of. When you look back that you made your decisions based on your education and your learning and your growth, own it. And you'll be that much more proud and that much more capable of telling the story of why you did what you did and how you did what you did. And then it's not a bullshit story, some stupid story. And I've encapsulated this in that whole dinner table investing statement I made. Dinner table investing. What the fuck are you going to tell people? Now, fine, great. Meme coins are great. Social trend, adoption, consumption, accumulation. That's culture and community. It's very meaningful. It's a cash with varying degrees of moneyness. I wouldn't call it a currency because currency is something you print using money. Now, if you use a meme coin to print dollars using credit, you're printing a currency. But it unto itself, any of them unto themselves are a cash with a degree of moneyness. And clearly their degree of moneyness is not favorable as compared to that of a Bitcoin. It's much less moneyness compared to a Bitcoin, but there's going to be some really great meme coins. And right now we're certainly going through the period of consolidation and concentration where the bullshit goes bye-bye. WIF has shown its hand. Shout out because Bitcoin has shown its hand with Andy on mainnet. So those boys are just literally owning a community. Folks can make mention to them. That frankly, that's something very interesting what they've done. It's not something I necessarily want exposure to, but I understand what they're doing structurally. I understand what they're doing with regard to management, and that the only possible way to describe that is very interesting. I've never really seen that before. So that's something worthy of highlighting. So it's meaningful. I don't need exposure to it, but go get it. I'm sure there's a large community of people. And that's pretty impressive to gather a large community and coordinate and organize a large community. And my way of exposure to these markets is I don't need exposure to that. And that's okay. This is a one player game. And you make your choices with position size, diversification versus concentration. Your portfolio is really a piece of art. And everyone's art is an expression of their sentiment, their emotion, who they are, who, what it comes from within. It comes from deep in here. I don't know, some movie reference in there somewhere. Deep within. It's art, which is an expression. A portfolio is an expression of how much shit you understand, an expression of hopes and dreams, and which need to be tampered with. You temper hopes and dreams with rationality to make good decisions to achieve those hopes and dreams. So everyone on YouTube and X, throw your comments. Let's talk about some coins. Let's look at some charts. Let's try and see good things in this market because literally it's only freaking good things. The tech is just, I'm an software engineer. I'm literally writing Android apps for like the last 1,000 years at this point. And this software is extraordinary. Software that has produced public economies, emerging markets, emerging economies of economies. I'm just absolutely stunned daily in what has been built over the last couple of years. Tapsy's in the house, just about to head out, but listening to the cap in my earbuds, much a pleasure. Trantaloid, by far my favorite commentary on markets and crypto, criminally underrated. Well, let's put that up. Thank you very much for what you do every week. Thank you. I appreciate the sentiment, and I know it's a relatively small community. I mean, some people have 5, 10,000 people listening. We have 191 between YouTube and X, but clearly my presentation is nuanced. It's me, and I could only do what I can do, and I'm certainly not. I don't have that different. People love to be shilled shit. Now, those are the larger communities. Folks that shill shit. Buy this. The price is good. You're going to make $1 million. I mean, these X posts, like, this is how this guy did it in 10 simple, easy steps. Oh my God. This is the grown-up community. So welcome to the grown-up community and how to look at a market that's relatively populated by juvenile and inexperienced and novice mentality, and welcome to the grown-up way to inspect this basically insane market of markets, and survive, because this is the place with the best opportunity of anywhere right now. Anywhere. There's nothing that is even remotely comparable. Pick a nation state. You investing in India? You investing in South America? You're dealing with people. You're investing in growth in China? They got a lot of deflation. You're investing in the yen because your dollar goes a long way in Japan right about now, so you could probably do a fair amount of good investments. If you have enough money, build something, build a manufacturing plant, build some residential, commercial properties. Or you can deal with software. So to me, the software is just remarkable. Anywho, Diego, hi Noah, is RAM discounted or Arrow at a premium? Okay, first topics. Arrow is at a significant premium. Oh my. I absolutely love Arrow. I love Base. I love the narrative of Coinbase and their own EVM, which is an optimistic superchain, and the capacity for Coinbase users to directly interact with an EVM. And at some point, all of Coinbase becomes the EVM. literally write everything of Coinbase. Everything that Coinbase does can basically be done on the EVM, other than you could use oracles and directly integrate them with banking infrastructure. You could literally build it all in smart contract form. So the potential is extraordinary. Very, very interesting what's going on Base. Uh, but certainly not at a discount. Aerodrome, for that matter. I would love an aerodrome exposure. I have plenty of optimistic super chain exposure. So I don't necessarily need the exposure. I would like the exposure. Can I get a discount? Is this at a discount? Fuck no, this is not at a discount, ladies and gentlemen. Look at that goddamn price. Which basically means I can't buy it. That's my rule. And that's okay. And someone else could scream, "Oh, I'm going to buy it," because I've seen other people scream, "I'm going all in at $1.80." That's not a pretty comfortable position to be in, being all in at $1.80. Whole portfolio is down significantly in that regard. I don't like all in. That doesn't make much sense to me. It doesn't really fit into my framework at all. I think in terms of exposure. I would like exposure. Can I attain at a discount? I cannot attain at a discount. Even the aftermarket VE NFT sales are not at a discount. What's a discount to me? What would be like, all right, cool. It was at a significant premium. There was a big meme coin rush. It has become adopted as a very meaningful part of the base ecosystem. A good discount, 37 cents. Because that would be like, all right, fine. You're down at 10 cents and you're like at historic lows and you're down still a fair amount. You're down 70% of the money. No, yeah, give or take. 40 cents. That's an interesting level. I'm not going to buy at these prices. Just not gonna. And that's okay. Great. It goes to $5. It goes to $10. Do you know what the market cap is? It's besides the point. That's besides the point. Folks were literally speculating at the $5 billion market cap, $7 billion market cap like last week or 2 weeks ago. Not me. It's not a premium. Look at the richness and robustness of the base ecosystem. It's lacking significant financial infrastructure. First and foremost, one of the most important data points is volume. How's base volume? From top at 659 mil a day, it's down 50, almost 50%, 40 something percent, maybe 40%, 40 to 50% on the daily volume. What have we talked about with regard to breadth? BREADTH, growth. If this ecosystem was expanding, it would have been at 659, 7, 7 and a quarter, 8. This is a structural change in the behavior of people on the network. Lower highs, lower lows, down 50% from top. Now, sure, it's always the case that the biggest of money is a bet on the change. Like all of a sudden, if you go to 600 mil volume on the daily, yeah, of course, you have an asymmetric bet on. But as of right now, I follow the data on the daily. I bet on today. And today says this trend will continue, and you'll see lower and lower activity. And what is a result of lower and lower activity? Depreciation, lack of opportunity, concentration of capital. The meme coins are going to seriously concentrate on base. Seriously concentrate on base. There's going to be few that remain, and there's going to be some really great meme coins. There probably could be some significant appreciation as the stuff, the bullshit, evaporates into nothingness and all that capital concentrates into the few remaining, and that's cool. It's not a market that I'm too interested in right now. I certainly have it on my radar, significantly on my radar, but it's not that I'm not too interested in it right now. RAM, Arbitrum. Let's take a peek how Arbitrum's doing. A little bit of a different story. weekly change of 35% to the upside in volume. So here's the thing, 35%. Delta in volume. Delta in volume, sure, you need, like candles on a technical chart, you need confluence. What does that mean? You want to see increasing volume. If you have 35% next week also, or even just the green number next week, that means volume's increasing. Things that are increasing will continue to increase until they stop increasing. The trend continues until capitulation. So when you see a delta, a change in volume, that's indicative of capital flight from one market to another. Now, these markets, as I talk about them in terms of nation states, and they just move faster, very fast. So capital could easily flow at a base to how many other chains? And that's what it's doing. And that's not can it is doing that. That's why there's a decrease in volume. So capital flows in search of opportunity, in search of yield and just delta in price action. And I see data that suggests rotation of capital out of base into other networks. Where? What other networks? Interestingly, that base is an optimism supertrain, same technology. Optimism. 51% green on the week. That's a big rotation. Generally speaking, you should see appreciation on optimism, significantly increased volume on the DEXs. Oh, how about that? That's pretty obvious. 51% on the week, and Velodrome is up 40% in volume. What's that going to do to fees? And if fees are increasing, what's that going to do to interaction with the protocol? Potential opportunity seen in current price point. Maybe price point is decreasing, but it might not decrease as much as other businesses on other chains because of relative perception of opportunity. Optimism is doing very well. Binance Smart Chain, getting a little action, relatively muted compared to shit back in 20 and 21. But that's the same as Phantom as well. That's got big numbers, 72% delta. But this is these are foreshadows when I see these deltas in volume. I mean, folks really don't remember 2022 and 2023. I mean, everything was cratering. So please extend me a little wiggle room with regard to my excitement when I see green volume on the weekly in double-digit percent, sometimes triple-digit percent. Amidst this red in the prices is a shitload of green that is very exciting. Let's go over to stables real quick and see some deltas. We spent 2 years, ladies and gentlemen, with zero sum, if not, for the vast majority of the time, negative sum. It's a positive sum environment across the board. This data is very exciting. Ethereum mainnet, 1.32% on the weekly. That's exciting. Let's see where base is at. Base has been growing significantly. I remember when this was at 400 mil, up to 2.14 bill. Very interesting. But with the delta in volume, what are the stablecoins doing? That's an interesting one. Stablecoins do go to the LPs, and we would see that maybe in an increase in stables on Velodrome. Basically, Uniswap also. Uniswap is the king on almost any chain where it exists. But it's also an on-ramp. I mean, you can go from Coinbase directly to Arbitrum. But once you're into base, you're like, oh, maybe there's a whole world out there. There literally is a whole world. So I expect this, in many regards, to be an on-ramp also, a gateway, so to speak. So that's big. That's very interesting. And this just further confirms my opinion that base is a big deal. There's a big delta, either being monetized directly by Coinbase or its user base. It doesn't matter. That's a lot of capital relative to certainly zero and relative to other markets. Very exciting to say the least. Arbitrum marginal positive sum game still retains leadership position, 3.397 as compared to Binance Smart Chain, still in the lead at 4.9 billion. Arbitrum is the largest, Binance Smart Chain is an Ethereum. It's an L1 EVM, the first alternative L1 EVM. But this is Arbitrum is the largest destination for capital in a real Ethereum type network. So that's interesting. Avalanche, are we positive sum? All right, fine. At least we're positive sum. Solana, quite positive sum, 3.25 bill. Arbitrum and Solana were as we started the season more towards the beginning of the year, in a very similar category. So I kind of lump Arbitrum and Solana together. Maybe like a Phantom and an I don't know Avalanche, but much more capital here. Phantom has really just got nailed, 350 mil. Phantom is kind of like Optimism, but Optimism is growing significantly. Could someone in comments just confirm that audio is still working? I need to make sure that's the case. Maybe I just check because I've been having audio issues lately. No, toast, looks good, looks good. Let's keep it going. Let's keep it going. I confirmed it myself. Optimism, look at that. So what do you got? Double confluence suggesting increased network activity and increased opportunity, 8.27% of the daily. And if you look at the volume on Optimism, that's up bigly. So that's very interesting. So we'll come back to Diego's question, which is still on the screen. We'll come back to RAM in a second. This is the data this is what tells me the backstory about what the hell's going on in the markets. And the only way to answer these types of questions, discounts, premiums, is to understand deltas and volumes and delta in currency units in a particular market. This is the richness of the investigations which required to assess discount or premium. It's not as simple as a novice or a juvenile would think. Someone needs to say it. Minus 44%. It's been very volatile with regard to stablecoin flows since USDC.E came on, but I have a high opinion of what's going to happen with Phantom once Sonic really gets cooking. Anything else in the top list that interests me? Not really. I have been following, obviously, Linnea with Nile. Very, very interesting. 2.28% positive sum environment. Microscopic to say the least. I don't think stablecoins really encapsulate, and maybe that is the case, but if you look at volumes, paints a constructive picture. Positive 2.28%. And then if you go over to volume, you can see something actually quite extraordinary, 82% of the weekly. A little bit down from the last couple of days, but that's a big look at the structure. Just merely look at the structure. Yeah, you could go back to last year, but let's zoom in a little bit. That is a nice structure, sloping upward trend in volume. Very healthy, very exciting, very interesting. And two dominant actors with Pancake just being marginalized, which is really a completely different story compared to Binance Smart Chain, where Pancake dominates and owns the network. Same thing with Avalanche, where Trader Joe owns the network by multiples. And those are the only really two markets where Uniswap exists. Doesn't Uniswap exist on BSC? Uniswap exists on BSC. Yeah, but look at isn't that fascinating? Uniswap is dominant everywhere except a couple of networks. Binance Smart Chain and Avalanche. I mean, PancakeSwap is multiples. And you go over to Base, and Uniswap owns Base by multiples. You go over to Optimism, Uniswap owns Optimism by 8x. Go over to Mainnet, Uniswap owns Mainnet by 8x, 9x, give or take. Very, very interesting. Polygon? Isn't that QuickSwap? QuickSwap owns it by 8x. Retro's coming up, though. 1.53%. Dodo does weird things with regard to how they get their volume to TVL. But retro at 1.53, it's quite interesting. Retro is another variant of the VE33 implementation. Same team, I think, as same team as these guys, Linnea. Same team as LionX, I think, because there's options. They use O tokens instead of the X tokens of the kingdom, which is very interesting because O tokens, I think, are a big deal. They happen to be very sophisticated, so they're kind of probably overwhelming, especially to novices. It's like you got to pay to claim. What does that even mean? So it's a little confusing, but it's a big deal with regard to sustainability of the protocol. This is going to be a very interesting duopoly. I mean, this data literally screams duopoly, doesn't it? Two V33 dexes, each with a significant capacity to finance liquidity depth, with slightly different protocol implementations, but also equally very high volume to TVL and capital efficiency. This is going to be a very interesting duopoly. So let's go back to Arbitrum. Arbitrum's owned by Uniswap, as we said. Camelot's being encroached upon by obviously Ramses at 53 mil on the weekly. 797 compared to 540. Other stuff is coming up short. Pancake not really going to be able to compete, I think, with V33 and the capital efficiency, and certainly not Uniswap. So those types of protocols don't have the chance. But as Alex Cutler from Velodrome talks about, I think the V33 is going to have a capacity to at least try and encroach on Uniswap's territory. And I share his optimism in that regard. I wonder what's going to happen with Camelot. You know, it's a VE implementation, so it's certainly significant. But I think it's going to lose out to what like Token Price talks about. I think V33 does have something more significant than voter escrow implementation, much more interesting and rich alignment of incentives between LP providers and vote renters. The bifurcation of deficit spending versus transaction fee cash flow going to vote renters. Um, so I do think VE3 does top voter escrow with regard to volume because of that change in alignment. It does not invalidate any regard the significance of voter escrow. I think Camelot retains a significant position in the Arbitrum ecosystem, but I do think V33 protocols do further find their way to the tops of these networks. Hope that helps. So Arbitrum, Ramses, let's take a look at the data. Big retrace from top. Made its way all the way to 20 cents. It's getting there. That's getting to discounted zone. So discounted zone, as RT would talk about, is probably like 236 or lower. I don't really use the same charts he does, but ultimately his zones are an extension of the fib retrace. You know, you see big wick down below 236. That's getting interesting. That's a big retrace from the top. And, you know, at some point, I'm very curious where support will be. Maybe it'll be at 236, and you do get to the zone of opportunity, the pump chaser zone, as he talks. Or maybe things continue to decay for some time. And in that regard, we do have to look at macroeconomic data. I'm not going to digress right now into macroeconomics, but you're all welcome to ask me to hit some macroeconomic data, and I could look at that more towards the end of the stream. It's getting into the discount zone. Very, very constructive from a price entry standpoint. You know, the lows are. Let's get it. There you go. 1.6 cents. So what kind of premium is a discount? Yeah, crypto terms, premiums usually 1, 2, 300%, which is quite remarkable from a traditional financial perspective. But that's generally a region that's like, all right, fine, 1, 2, 300% premium, especially with regard to voter escrow and V33. The folks that have these types of positions down here, that's because it's illiquid and they're locked. So when you pay them 1, 2, 300%, it's not like you're getting dumped on. And I think that's considerable. When you see this kind of froth, clearly they're liquid positions, and that's why this kind of behavior occurs. But when you're seeing all this decay, because the only people remaining are the locked positions, and then all in comes capital trying to figure out what to do. So structurally, from the future, heading into 2024, the end of the next couple months in 24, you get to see hopefully higher lows. I'd be curious if this low gets invalidated at 7 cents, but you'll see higher lows at some point. Maybe it finds a low at 4.6 cents, about 50% down from here. Not unreasonable. And maybe you'll never get the discount. So I don't have I can't answer those questions, Diego, but certainly, as you can see, it's an entire conversation to be had about such questions. Hope that helps, my friend. How do you decide what to vote on with your lock positions? Do you vote the same way every week or a different protocol, or do you change up for different bribes? Vote rentals, bribes, same thing. Depends on the protocol. Curve mainnet, I tend not to want to change my vote. With my size, it's best I just stick with, I support Abracadabra. That's a heck of a business they have. And I think their tokenomics are certainly in more favorable condition as compared to earlier implementations. Was it MMIM, the cash version of their deposited MIM is certainly interesting. Yeah, they cater to a particular user base. Abracadabra will do very well when the market is exuberant and people want to degen leverage, and they'll leg up everything. All of this is going to leg up because the contracts are there. They'll exist in the future. So these businesses will see the markets of 2028 and 2032. So structurally, you'll see higher lows over the next 4 and 8 years. That's it. It's just a choice of what you want exposure to. And you let time do the rest. So I support them because of how much cash they throw around. Everything else I can't really, that's Curve. You guys don't really care about Curve anymore. Curve's boring. That's old. You guys need new and fancy. So with regard to V33 protocols, the voting strategy is relatively simple. Sort by rental, and then you want to find most rental plus most transaction fee speculation because it's a forward-looking projection on past week's transaction fee revenue. It's a pretty simple statement, particularly because that's the most capital revenue possible. Largest incentive plus largest transaction fees. So that's just sorting the lists appropriately. Simple as that. I hope that helps. No horns, no tail. Who will win, Atlanta or Liverpool? Liverpool. Hope that helps. Dan, good morning. In the house. Anton in the house, Cap. Curious as to your thoughts on Velo and Arrow charts and retracement levels. I nailed Arrow pretty good. It's just at a ridiculous premium. I mean, Arrow literally is the epitome of a degenerate market filled with novice investors. You don't have to be an adolescent to be a novice investor, but things don't go up like that. And when they do, they come down. It's not at a discount at all. And that's fine. And that's okay. It has nothing to do with the protocol and the business, which I like. And I want exposure, but I'm not going to buy it at these prices. Am I salty that I didn't get it at a cheaper price? No. Do I wish I got it at a cheaper price? Sure. Do I have the capital to buy the position size that I would want at a cheaper price? So now I'm thinking of how much capital I have versus what price point I would need to be able to buy the position size that I want. I don't even have that. I don't think I'm going to get the position size that I'd want. I need 20 cents. That's all I got. You only could work with the amount of capital you have. You have to respect your portfolio. It's just very important. And if I don't have the amount of capital for a position size, then in my mind, I know that I would want To have a well-structured portfolio, I can't have the position. And that's okay. Hope that helps. Oh, let's look at you mentioned Velo. Velo's doing the same retrace everyone's doing. That was just a big rip to the upside. 38 cents from 8. 0.236 wicks below. There was that big VE NFT we were looking at that was like 74K was down at 9 cents. That was a hell of a VE NFT. I just didn't have it. Just didn't have the capital. I would have had to I would have had to tap the Bitcoin reserves, and I wasn't doing that. So like I'm just happy I have the cash, grateful that I have the cash. And yeah, I would have loved that. I would have loved to take that NFT. That was 9 cents. It was like 850,000 Velo. It was just a great, great price. The next cheapest one is even more expensive. He's selling it for 59 cents on the dollar, and it's he wants something like 84 grand. It is what it is. You can't buy even the things you want to buy. It's like the degeneracy to run out to get a car and you're paying 110 on some shit and you overpay. Stop overpaying for stuff. That's why consumer price inflation is so high. And everyone's just in a frenzy to keep living the same way and afraid to cut back and afraid to say, no, I'm not paying that price. I'm not paying that price. Period. Uh, Raoul's in the house. Pleasure, Sir Joe. Present and accounted for, sir. Yes, sir. Which revenue generating protocols that you own or don't are you most bullish on from an income perspective? That's a great question. I generally think the Forex markets are the most interesting. I think the perp dexes are interesting. I'm curious what happens with intent dex on Mantle, by the way. Um, I just tantalize. I love Go's great. I think Avi is one hell of a business. And I will, once they do their fee switch, I will be inspecting their price point relative to their cash flow and available capital if I could attain a position size. So Ave's going for it for an actual business where they pay you. So that's interesting. I love that business. That's a money market. It's a bank. It's literally a bank. I mean, Curve USD is a ridiculous business, and the vertical of the Curve tech stack is just remarkable and extraordinary. We obviously already have exposure to that. I'm really excited about CRV-USD and expansion, and I think it's a great product. I think it's groundbreaking. Um, what other stables? I'm excited for Abracadabra and MIM. I think that has its place, and it's going to do very well in the next 4 to 8 years, 12 years. It's going to be there. It's not going anywhere. Isn't that a remarkable thing to say? It's not going anywhere. It's going to be there. It's going to see the future market. There's no bankruptcy. There's no insolvency if it's coded right. And that's why it's imperative to inspect immutability, determinism, and how well is the implementation protective of infrastructure. That's why CRV-USD shines. It's not a redemption model. It's a soft liquidation model, and that's groundbreaking. It is more likely to not have issues as compared to redemption models. Liquidity, for example, Prisma, for example, very hard or much harder to adjust interest rates to manage pricing of the dollar unit of PEG. Whereas CRV-USD is literally, it's all software. Interest rate adjusts. I have a Frax lend. Interest rate adjusts. It's going to do what it needs to do to manage collateral valuations relative to liabilities. The infrastructure is defended and protected. That's a big deal. Because nothing in traditional finance does that shit. Nothing. Oh, Arrow, I'm excited for all this stuff. I love the portfolio. Why? I created the damn portfolio. It's everything we talk about on Discord. It's the most exciting portfolio because this is the most exciting market of markets. And the price point's going to drive you nuts. That's why I talked for the last 2+ years measuring weekly revenue and try and get some damn discount so the price point, when it's volatile, doesn't hurt so much. So entry price is what helps mitigate the volatility of the price point. If you're up 20x on the money and you is down 75%, and that entire period you're making the same amount of revenue, if not more, did any of the price volatility matter? Or the revenue matter? Because it certainly doesn't matter to make as much money as possible. That's a relatively novice and juvenile perspective. Because you don't need as much money as possible to live. You know how much money you need to live because if you're 30 and 40 and have a family and shit, you know what your monthly bills are like. All right, so be reasonable. Be reasonable and you will achieve reasonable goals, reasonable expectations. And man, why do you think Raoul Pal tells his listeners to stay away from yield farming and DeFi? Because everyone loses their fucking money. For lack of a better phrase, everyone is redacted, and everyone being the majority. Because most people don't have a capacity to be as critical as we are in the conversations that we have about risk, about position size, about volatility, and they're frantic and they're over emotional and they're not rational and not calm, cool, collected, smooth. That's why. He's talking to the majority. He has a much larger audience. He has a freaking massive audience. So when you talk to an audience, you usually have to talk to the lowest common denominator. It's a mathematical thing. But for me, this is my content. And there's a reason why my user base is relatively small. So my content will be what it's going to be, and this type of content will continue. And this type of content will be here in 2028 and 2032 because the markets will be here and I will be here. So the future is a fascinating concept because it's coming whether you like it or not. I mean, the halving's on Friday, give or take. Oh my God. Very exciting. Very exciting. Bitcoin's a big deal, guys. Big deal. Hope that helps. He promotes staking, though. He got to be political. In fact, I'm political in some regards. You got to say things that are uh, not dangerous. I mean, he has more risk exposure, maybe not liability, jurisdictional arbitrage and whatnot. But when you're talking to people, you have to be considerate of what you say. You have to say good things, constructive things. And really, reason why I'm so comfortable talking about these things because it's always from the perspective of education. And most of my answers to questions usually come in the form of literally just another question. And my topics of conversation are really how to go about thinking about answering the question. I tell you the answers that I have to my own questions, and everyone will come up with their own answers to their own questions. My approach to the content I produce, and that's his approach to the content he produces. Hope that helps. Alessandro, how you think about having meaningful ownership of income generating protocols like Curve? For example, not everyone has the same portfolio size, so when does exposure make sense? Measure the amount of capital you have, measure the amount of revenue you could potentially produce by a particular position size, and think in terms of XYZ. How much does it cost? How much is it paying? And how likely it is to continue to pay into the future? If you can buy something for $10,000 that's producing 30% of the money that will produce $3,000 a year, how likely is it to continue paying? And what is the likelihood that you could buy it cheaper? Because if you could buy $3,000 with $10,000, but there's a likelihood you could buy it for $7,000, now you're making more than 30%. So that's your entry price. Contributes to the XYZ conversation we all have to have with ourselves, contributes to the topic of position size. Can you even acquire a position size? And if you can't acquire a position size that's effective, that solves your XYZ equation, you might have to think of some other opportunity. Now, all of this is certainly not applicable to, some kid living at home with like $100. You're not doing anything with $100. But if you have a career and you've been, out of school, whether it's high school or college, and you've been working and you're 24, 25, and you do have an account, 10, 15, $20,000, and it all starts there. And it just so happens that's where it started for me. 16, 17 was very different, but basically 18, 19, I maybe had like 75, and late 18 I had like 100 grand saved up, and like end of 2019, and by end of 2019, all that cash, all that went into crypto markets, about 100 chip. And everything I've done thus far is based on that base amount of capital. Now, your experience will be what it's going to be over years. So if that starts from a 10 chip, a 5 chip, it will always start from somewhere. And what you will see over time, if your process is working, that number goes up, the portfolio goes up over years. Measure over your 4-year cycles. Drive you nuts, the intra-cycle volatility. And then measure also from revenue, because that's the goal. The goal is revenue. And that's what I encourage, because that is a much more psychologically sustainable way to engage with markets. Measure not in, I made the most money possible. Oh, I'm so angry. I missed that incredible opportunity. I missed that meme coin that could have been $1,000 into $10 million. Fucking shit about that shit. I don't give a fuck. I don't give a fuck. Holy fuck. I got to duplicate what some random gambler did. That's not the way I think. Got to be more reasonable, more rational. What can the majority do? What is a story that the majority can do? And it just so happens I could tell that story because this is what I do. And I think this is a much more sustainable way for the majority to act. This is how you survive volatility. This is how you grow and build something that's meaningful, that you could tell a great story at dinner, why you did what you did. And the only way you're going to be able to tell that story is over time. And you'll know more. If you're starting now, you will only know that story in 4 years, in 8 years from now. So it just so happens that the youthful, if you're in your 20s, oh, that time is much easier spent. 8 years from now, for me, I'm 48, 49 years old. Different world if you're 20 and 8 years is 28. Whole different story. So much more opportunity when you're young. So much more opportunity when you're young because you have time on your side. Athletic concept on DeFi. Hope that helps, Alessandro. On DeFi Llama, it showing some random exchange of the top performer in all of crypto. Is this a mistake? Performer, as in volume? Yeah, who gives a fuck? That's some bullshit. Whatever. Maybe it's something interesting, but I'm not going to look into it now. But maybe it's an anomaly. Maybe it's a big deal. If it's a big deal, do you think you're finding something that no one else has seen? What's the valuation? What's the ticker? I don't know. There's a whole set of research that's needed to see uh, due diligence, extend due diligence. I have no idea what it is. Seems interesting. Marginal APYs. That's from like a staking perspective. What the fuck is this stuff? Ethereum? UT? I don't. Seems like seems like many things. Whatever. It's just not on my radar. And guess what? That's okay. I have the right to not give a shit about the top performing DEX as preferred to as with regard to statistics. That's my right not to give a shit, and that's okay. And great. Maybe it's a great investment, and I'm gonna miss it, and that's okay. It's okay. Food for thought. Hope that helps. Similar question to Alessandro. How do you determine how much to allocate to each protocol? So basically, how much free capital do you have? What are the size of your already existing positions? What is the productive capacity of a position? And I like to think in terms very much of XYZ and buying income. Can I buy $500 a week additional income? Isn't that that's a weird way to put it, but that is the case. I remember years ago I was talking on Twitter at the time, and I said a tweet that got some interesting response from some interesting financial folks because I was talking in terms of buying dollars. And that is a very weird alien notion to anyone from the US, especially kids. You buy dollars. If you're in Britain, you have to buy dollars. If you're in South America, you have to buy a dollar. You have to go to a store and purchase dollars. Isn't that weird? If you're in the US, you don't get buy dollars, you buy your own currency, and nobody uses pounds in the US. If you're in Britain, you use pounds, but you could go to a store and buy dollars. So, this happens to be the same thing, I think, with regard to income. You could buy income. You could purchase income. It's a reductionist perspective on obviously the concept of yield and APR. As traditionally with regard to like dividend bearing equities, especially REITs, buy an income. Oh, how much you making this year from your job? 80K, 100K, let's say. All right. How much is it going to cost me? So you go to a store. How much is it going to cost me to buy $40,000 a year of income? Purchase income. That's what you're trying to do here. That's what we're trying to do here. So that's a great way I think about how much to allocate. Relative position size, that's a contribute to a well-structured portfolio. And a well-structured portfolio is obviously a very subjective statement. It's like, does it feel right? Does it feel like it's balanced? Do I feel like I have exposure, decently diversified exposure? Is it excessively diversified? Is it effectively concentrated? You're going to spend 10 grand on a protocol and it's going to produce $50 a week. That's not necessarily the best bang for the buck. XYZ. How much does it cost? How much does it pay? And how likely is it to pay? So maybe that protocol is paying $50 on the week, but oh shit, it's a big protocol and it's probably going to be 13% on the money in the coming years and speculate to go higher, frax. So that was rationale there. Speculative income producer. And it turns out that worked out relatively well, albeit obviously notable depreciation of late. But we'll take a look at what is the state of that business that I happen to own. We're on Fractal. Let's go over to mainnet. The EFXS is not yet on Fractal. That's up at 12.62%. All right. Not bad. I listened, there was years that this took like 6 months to get to $600, $1,000. And now if it's an extra $800 a month, I'm fine. I'm not complaining. $1,000 a month, that's lovely. So this was that speculative business. That's the speculative income. I purchased a speculative amount of income that took some years to come in the future. And the best part is it's a business that's going to be here in 2028, 2030. So you just got to get it as cheap as possible. That's the name of the game. Hope that helps. Just got back. We still on. Tapsy's back in action. Oh, one more. I missed the arrow. Have you kept up at all with Timeless Bunny? Any traction with TVL volume? Oh, it's still productive. That kind of revenue comes in on Warden, Paladin Vote Warden. Go over here to Quest, and it's pretty consistent. I mean, Paladin is just consistent. 26% of the money, nothing to complain about there. It's pretty damn consistent. Obviously, lit. It's quite the volatile instrument, but these guys are just pretty consistent. I have not kept up with development. I'm looking forward to what they built. I mean, Bunny itself, as an incentive regime atop Uniswap, is a big deal. Now, if they could build all of that into a consolidated exchange using Uni v4 tech, that's sure as hell interesting. Do I have capital for additional exposure? Not necessarily. Do I want additional exposure? Not necessarily. Do I have already existing exposure? Necessarily. So great. I already have exposure. For me, done. I don't have to think about it much anymore. I already have exposure. It's done well over the last, since its launch, like what, a year and a half ago. So very content, and I hope something comes of it. I hope in the future my investments do well. And if they don't, that's why you don't invest in one thing. That's why you have a holdings company, and you own many businesses. And if you invest well, the vast majority of your businesses will become stronger and stronger into the future. So invest well. Don't invest poorly. Don't put all eggs in one basket. My mama always said. Be diversified, but you have to be concentrated to really get the meaningful returns. That's not an answer to how to construct a portfolio, but that's something to think about. You want to own many businesses, but you don't want to own too many. And that's going to be a different thought process for everyone that tries to think about that. Arrow is fantastic, but it will correct. It is already correcting significantly. There are whales selling their V Arrow, 75% discount. We have to wait. Cap, thanks for the space of rationality. It's good for my anxiety. Yes, if you have anxiety, it is imperative to cure that anxiety. It has no business in capital management. You must be cool, calm, and collected, because there's no reason to be any to not that. Be cool, calm, and collected. You have to find your way to that state, and that's the only way you're going to do yourself the very best with regard to capital management. Yeah, big discounts on VE Arrow because even a 75% discount is a ridiculous premium. Ridiculous. People are making a fortune on 75% discount. I mean, that's a great price. 25 cents is a great price. You know, that's huge appreciation. That's 400% appreciation. As a 400% is huge appreciation for an investment. 400% with regard to valuations, revenue, price to earnings, shit like that. Does it warrant a 400% appreciation over what time period? Sure is. So that, to me, that's a great price. 20 cents would be a wonderful price. And the protocol would be lovely. It's a great expression of activity and forex market on base. I'm not going to pay a premium. Not salty about it. I wish I obviously bought it and I didn't think the way I did back then. I clearly think different now, and all of that is okay. And if it goes to $5 and $5 billion and $10 billion market cap, that's okay. It's important for at least someone to tell you that it's okay to miss opportunities. But you need to start building exposure to different things because that's going to mean you're going to have opportunities play out. It's not going to be all of them. It's not necessarily going to be the best opportunities, but you have to start with exposure somewhere. Don't pay a premium. Lots of big VE NFTs for Arrow, 50% discount. Yeah, but 50% is 75 cents, guys. No. I mean, that's an interesting level. Sure, it finds support. Great. I cannot have the position size I need relative to my portfolio composition. I can't. I would, so Arrow, I would want to size it comparable to my other VE33 exposure. Why not? And if I can't do that, I'm just not going to take it. I value my capacity to make a choice with my free cash, with my Bitcoin, Ethereum, and stablecoins. And if I can't attain the position size I want, I'm not going to buy it. That's a hell of a number, 70 cents, and it's a hell of a technical structure because that's a complete invalidation of this entire move up to $2. And that could be very interesting. It could be very constructive. And it could go up to $5 from there for all I give a shit. If I cannot buy the price I want, I'm not going to buy it. Maybe it's a very Buffett mentality. Fire sale prices or nothing at all. My exchange is the shit. Yes, very interesting. Very interesting. Um, I'm on that blockchain and it's crap. It's on that crap eGold blockchain. Well, eGold, Elrond's obviously been lagging significantly. It was hot in 21. But, crap has a way of continuing to exist and pivoting. And the best businesses, the best products are often a pivot. Food for thought. But that also means it's a speculation that a pivot will occur and carry momentum and garner market actors to have interest. So there's risk associated with that, which is why I'm much more constructive based on today. What is the conditions today? How much is it paying today? And what is the likely future conditions relative to today? So that's something to consider. Uh, it's not easy what we do. But what matters is to at least be rigorous in the way you think about these things. And then you could always compare. I did this today, X, Y, and Z. And some people say to keep a log and track this shit. I did this today, this, and this. And then in the future, you choose to do this, and this, and this. And then you could compare and try and, do it much more in a documented fashion. But I don't know. I don't need to. Just do it up here. And over time, you will get better and more rigorous about how you engage with these markets. And don't chase shit. You don't need to pay a premium. And that's okay. Hope that helps, ladies and gentlemen. You'll check back in 2028 if you made good decisions today. And hopefully between now and 2028, the things you own, the businesses you own today, pay you a salary. And at some point, if not already, that salary can finance your livelihood. And hopefully it's today. If you could go into a store, if you make 100 grand a year, and if you could go into a store and ask the sales guy, how much could I buy 100 grand a year for? All right. If you can afford it, you can buy it today. If you can't, you have to work towards it. The complexity is a lot of people do that with regard to like promotions and raises, and that doesn't work. It doesn't work. But you can buy it. You can buy a salary. And that works quantitatively. Time. Let time do the work. Hope that helps, ladies and gentlemen. I wish you all a wonderful day. Wednesday, April 17th, 1:03 p.m. 232 people made it to the end of the stream. I appreciate each and every one of you. Tell everyone to subscribe. You know the deal. We have our Discord, the most rational community in the entire crypto space. I appreciate each and every one in there that completely survived the bear market and made it all the way to today. And we will be there in the future. I will see you guys later this week on a Friday. Stay rational. See you then. Peace.